What about the signal risk then? Well, this is a key concern for the hawks, the signal that the cut sends to the market. By cutting when inflation is still 3.2%, well above the target, of course, the bank is risking de-anchoring inflation expectations of consumers and of businesses. It implies there's some kind of tolerance for above target inflation, a tolerance that I would argue has always been there and was definitely going to be there after the pandemic, because we desperately needed inflation if we weren't going to grow at a wonderfully rapid rate, which we never were realistically. How else are you going to do it if you've got so much debt? You've got to inflate the debt away. Nobody wants to hear this. The bond markets realise this, which is why they're demanding more premium, better yields, lower bond prices, more returns for their money, especially in the particularly long run in the UK. So that signal risk is something we've got to bear in mind. You don't want this sort of tolerance to creep into things. The dissenters feared this would loosen financial conditions, so lower swap rates and bond yields too aggressively, undoing the work of the past 2 years. But the majority view, what is it? Well, capitulation to stagnation, I would say. So who were the 5 who voted to cut? Andrew Bailey, the casting vote, probably the least qualified, or certainly the least qualified on the committee to be making that vote, but that is the job of the governor, of course. Sarah Breeden, the deputy governor, but not for monetary policy, note. Swati Dhingra, a permadove. Dave Ramsden, a dove curious guy, another deputy governor, but again not for monetary policy. And then Alan Taylor, absolute permadove since he joined the committee. They were driven by a different set of fears, and for them the risk of over tightening had become the dominant threat.